Hello students, I am Manjunath V from Aranis Commerce and Management College, Mysore. Today in this video, let us learn how to pass journal entries with respect to issue of shares illustrations. Today we will concentrate on a simple problem with forfeiture entries. Let us first glance at the illustration. The given illustration is with respect to Vikas Trading Company Limited. So let us first discuss various aspects of the illustration. The Vikas Trading Company Limited issued 10,000 shares at rupees 10 each at a premium of rupees 2 per share. Here in this illustration, it is a situation of premium issue of shares. The face value of the share is rupees 10, but company issued the shares at rupees 2 per share as a premium. It indicates the company issued shares at rupees 12 per share. The amount is payable as follows: rupees 2 on application, rupees 5 on allotment, which includes a premium amount of rupees 2 per share, rupees 3 on first call, and rupees 2 on final call. If we add up 2 rupees of application, 5 rupees of allotment, 3 rupees of first call, and 2 rupees of final call, we should get a total of 12 rupees at which the company decided to issue shares. All the shares were fully subscribed and money duly received except the final call on 1000 shares. Here it indicates the money is fully subscribed for the shares, but except on 1000 shares, one of the shareholder failed to pay the final call amount. The directors forfeited these shares and reissued them as fully paid at rupees 7 per share. Here, one more situation is given. The directors forfeited the 1000 shares and also reissued them as fully paid at rupees 7 per share. The face value of the share is rupees 10, but at the time of reissue of forfeited shares, the shares are issued at rupees 7 per share. These things is to be first kept in mind before moving on to pass journal entries. So I request all you all of you to first note down these aspects well in advance before moving on to journal entries. The application money, allotment amount, first call money, second call money, number of shares forfeited. These things is to be first record in a separate sheet, and later on we can move on to the journal entries. I hope all of you have already taken this problem in a separate worksheet. Now let us concentrate on the solution part. Journal entries in the books of Vikas Company Limited. The first entry is to be recorded is with respect to application stage. The application money received, for which entry is to be recorded. Whenever an amount is received and deposited into bank, the bank account is to be debited. Here in this case it's a full subscription. When it is a full subscription, the number of shares offered is equal to number of applications received. That's why here 10,000 is multiplied with 2. 2 rupees is the application stage per share value. So 10,000 applications received for shares, 10,000 into 2, the amount is to be recorded as 20,000. The amount is received towards application stage, so that's why a credit entry is to be recorded as 2 share application account with an amount of rupees 20,000. And after each journal entry, a small brief explanation is to be given as a narration. So here in this case the narration is being application money received at rupees 2 per share. That's the end of the first entry. Now moving on to second entry. whatever the amount which is collected towards the application stage, it should be transferred to capital account. For transferring the application money to capital account, an entry is to be recorded. Share application account debited with rupees 20,000 and to share capital account being application money transferred to share capital account. In the previous video, we already discussed about the format of journal entries for issue of shares. We are just following the same kind of format entries in this illustration. Please recall all those format of journal entries with respect to issue of shares. Moving on to the third entry. The third entry is the due entry for allotment stage, the second stage at the time of issue of shares. The share allotment account is debited. Here in this illustration, the allotment money per share is given as 5 rupees. The number of shares offered is 10,000 and allotment money 5 rupees per share is due. So that's why 10,000 is multiplied with 5 and the amount is derived as rupees 50,000. To share capital account. So here in this case, to share capital account is credited with 30,000 because 5 rupees of allotment stage amount includes premium. In this case, the premium amount is rupees 2 per share. Whenever a premium amount is collected, a separate account is to be mentioned for premium amount. The name of the account can be given as securities premium account. That's why there must be a breakup of 5 rupees per share. The breakup is 3 rupees is to be meant for share capital and the 2 rupees is to be meant for premium. That's why two separate credit entries are recorded. To share capital is credited with 30,000, 10,000 shares at rupees 3 per share, excluding premium. And to securities premium account, here 10,000 is multiplied with 2 rupees per share with the premium amount of 20,000, with the premium amount of rupees 20,000 being allotment money due is the narration. The fourth entry is collection of allotment money. Whenever amount is collected, bank account is debited and the amount is to be recorded as 50,000, that is 10,000 into 5 rupees is the amount due 50,000 and it is collected to share allotment account. The amount is collected towards which stage? It's an allotment stage. That's why to share allotment account is credited with 50,000 being allotment money received on 10,000 shares. At the time of collection of amount, no need to show any separate entry for premium. It's a combined entry. Amount of 5 rupees is collected and it is deposited into bank. That's why the premium account entry will not appear at the time of collection of allotment money. Only at the time of passing and due entry, a separate premium account entry is to be recorded. Next, moving on to fifth entry, that is next stage at the time of issue of shares is a call stage. So here in this case, it's a first call money due entry is to be recorded. Share first call account is debited with 10,000 into 3 rupees. That is 10,000 number of shares at rupees 3 per share is the due amount towards first call. So total 30,000 is debited to share first call account. The share first call account is due towards share capital. That's why a credit entry is recorded as to share capital with an amount of rupees 30,000 being first call money due on 10,000 shares at rupees 3 per share, a narration to be recorded. Next, amount to be collected towards first call stage. Amount collected and deposited into bank. The bank account is debited with 10,000 into 3, 30,000 rupees. And the stage of amount collected is the first call stage. So that's why to share first call account is credited with an amount of rupees 30,000. By mentioning the narration as being first call money received on 10,000 shares, an entry is to be closed. Moving on to the next entry, that is next stage at the time of issue of shares is final call stage. That is second and final call. So second and final call account is debited. 10,000 into 2 rupees per share is the due amount towards the second call. So 20,000 rupees is debited and a credit entry is recorded to share capital account with an amount of rupees 20,000, being second call money due on 10,000 shares at rupees 2 per share. A narration is recorded. Next, collection of second call money. Here we should be very careful because one of the shareholder failed to pay the second call money. Therefore, at the time of recording the entry, we should be careful. Bank account here debited. Amount is collected and deposited into bank. But instead of 10,000, we should record it as 9,000 because out of 10,000 shares offered, 1,000 shares on which amount is not collected towards second and final call. So that's why only on 9,000 shares at rupees 2 per share the amount is collected. That's why bank account is to be debited with 18,000. This is derived by multiplying 9,000 at rupees 2 per share. To share second call account, a credit entry is recorded and 18,000 is to be mentioned on the credit column. Being second call money received on 10,000 shares, narration is to be recorded. One more variation can also be there in this journal entry. In some books, some authors may also record one debit entry for default of shares. Bank account can be debited, calls in arrears account can also be debited, and to share second and final call account. The amount due on 1,000 shares can also be shown in the journal entry. If company would like to show it in the journal entry, then the journal entry would be bank account can be debited with 18,000, calls in arrears account can be debited with 1,000 into 2 rupees, that is 2,000, and to share second call account can be credited with 20,000. This is an alternative journal entry. The next is Board of Directors decided to forfeit the shares. 1,000 shares on which final call is not received and directors decided to forfeit the shares. At the time of forfeiture of shares, a cancellation of shares process is to be undertaken. Passing an entry for a forfeiture of share for which first we need to debit the share capital account. Share capital account here debited with 1,000 into 10, which amounts to rupees 10,000. 1,000 shares forfeited and 10 rupees is taken because it's a fully called up stage. When I say it's a fully called up stage, the full face value of the share for which call has been made by the company. Up to final call, the call has been made. That's why the full value of the share is taken into account at the time of forfeiture of shares. Share capital account is debited with 1,000 into 10, which amounts to rupees 10,000. At the time of forfeiture, whatever the amount already paid by the defaulter, it will not be repaid or refundable. That's why the amount which is already paid by the defaulter is to be kept in a separate ledger name or a account name, and the account name is known as it's a forfeited shares account. It is a kind of gain or an income for a business concern. That's why forfeited shares account is credited. On 1000 shares, the defaulter had already paid application stage amount of rupees 2 and allotment stage of rupees 3 excluding premium and first call money per share rupees 3. By combining all these three we can get 8 rupees. That's why 1000 shares is multiplied with 8 rupees and the amount credited is 8000. To share final call account. The stage in which the defaulter failed to pay the amount is to be credited at the time of forfeiture entry. Towards share final call account on 1000 shares at rupees 2 per share, the amount is not collected. That's why 1000 into 2, 2000 rupees is mentioned on the credit side of the amount of share final call account. Being 1000 shares were forfeited for the non-payment of final call money is the narration recorded for this entry. Next, moving on to reissue of forfeited shares. 1000 shares were forfeited and reissued as a fully paid up at rupees 7 per share. When forfeited shares were reissued, amount is collected and deposited into bank. So bank account is debited. 1000 shares were reissued at rupees 7 per share. That's why bank account is debited with an amount of rupees 7000. We should recall that the face value of the share is rupees 10. But at the time of reissue of forfeited shares, the shares are reissued at rupees 7 per share, which is less than the face value. So 3 rupees less than the face value is collected at the time of reissue. This 3 rupees is a loss for a business concern. That's why this loss can be adjusted by utilizing the amount available in the forfeited shares account. At the time of forfeiture, we credited the forfeited shares account. Now, at the time of reissue of forfeited shares, if there is any loss, then such loss is to be adjusted by utilizing the amount available in forfeited shares account. That's why forfeited shares account here it is debited with 3000. The amount of 3000 can be obtained by multiplying 1000 into 3 rupees. 1000 forfeited shares were reissued at a loss of rupees 3 per share. That's why 1000 into 3 is taken into account to record 3000 rupees as a debit for forfeited shares account. A credit entry is to be recorded as 2 shares capital account 1000 into 10, that is face value 10 rupees. So credit amount 10,000. Being forfeited, shares were reissued at rupees 7 per share. Next, whatever the final balance which is available in the forfeited shares account, then such final balance is to be transferred to capital reserve. Forfeited shares account is debited to capital reserve. It's a transfer entry. So here we obtained an amount of rupees 5000. How can we calculate 5000 rupees? This can be done by observing the previous two entries. In the ninth entry, the forfeited shares account is credited with 8,000. It's a credit amount. In the 10th entry, at the time of reissue of forfeited shares, we utilized the forfeited shares account balance of rupees 3,000. So credit entry of 8,000 and debit entry of 3,000. The net figure of these two is 5,000. That's why the forfeited shares account net balance of 5,000 is transferred to capital reserve. This 5,000 rupees can also be obtained by preparing a separate ledger account with respect to forfeited shares account. If you prepare a forfeited shares account separately and posting the entries of forfeited shares account, then ultimate balance you will obtain as 5,000. The narration to be recorded for this entry is being final balance in forfeited shares account is transferred to capital reserve. Now I hope you have understood properly how to solve an illustration with respect to issue of shares. On the same line, I have given one assignment for all of you. Please go through this illustration. This illustration is very much similar to today's video. Whatever we have learned in this video as a solution based on which this assignment problem is given. Please work it out at home and check your progress. I hope all of you have enjoyed this video. I will meet you in the next video and thank you for watching this video. Thank you.